Greetings to one and all. Today's video is about the examples of the classification of accounts. Our last video, we did see what are the different types of accounts. In accountancy, how are the different accounts being classified based on certain rules? What are the golden rules? All those we have already seen in our last video. Now for those who have not seen my last video, please go through the video by clicking on the link given in the description box. Now let's see a few examples. In today's video I would be taking up only 5 examples. Let's see one by one those examples. Now whatever we are doing in today's video is just an understanding of the examples which would make things easier for you to understand when you're doing your journals. I've taken up in this video few examples which would give you a fair idea of what exactly is meant by account. How do you go about applying those golden rules that we have seen? So the first example, I'll just read out the examples one after the other and then we will see them one by one in the video as we proceed slide by slide. So the first example is commence business with cash rupees 25,000. The second, purchase goods on credit from Sanjay rupees 10,000. Cash sales rupees 9,000. Received commission rupees 800. Paid rent 1,000. Now let's go about one by one. How are we going to go about before we make a journal entry? What is the steps that you would be following before you put down things on paper? Let's begin with the first example, that is commenced business with cash rupees 10,000. Now whenever a transaction is being given like this, the first thing that we would be doing before putting things on paper or before you ask your writer to write something on the paper, what goes on in your mind, these are the steps that you would be always thinking about first. So first of all, when you get a transaction, think what are the aspects that are related to the transaction. You as a businessman, what are the things that are important for you to record? Now, in this example, you have started the business with cash rupees 10,000. So, what are the 2 things that you would be recording? So, every transaction would have a double entry, would have 2 sides. So, for the same transaction, you would be entering it into 2 different accounts. So, what are minimum 2 different accounts? Remember this. So, when you are putting it into any 2 accounts, what are the 2 things that you have to take into consideration is called as the aspect. What are the 2 aspects to it? Now, in this example, we have cash which is coming into the business and we have someone who is giving that cash into the business. Now who is that someone? Someone is nothing but the proprietor. So from the artificial point of view, artificial person's point of view, from the business point of view, the owner also is an outsider. So the owner here owner is no one but the proprietor. The proprietor has invested in cash rupees 10,000. So these are the 2 aspects when you see this particular transaction. One, cash is coming in, and second, the proprietor is giving in. Now, what are the 2 accounts involved? What would you record into the books of accounts? One would be the cash account and second would be the capital account. Now let's go one by one. Cash account is very, very evident because the transaction itself begins with the word cash. But how did this capital come into picture? Now always remember, When a businessman is recording a transaction which is related to him, he would never ever put his name directly. So, a businessman's name or the owner's name would never appear directly unless and until it is followed by either capital or drawings. Now, capital is the amount of money that he's getting from the personal property or the personal assets into the business. So whatever he gets from his personal belongings to the business is always termed as a capital. Now, the two accounts, that is cash account and capital account, is further being analyzed by you as to what are its types. So cash, is it a person? Definitely no. Is it real? Yes, because it's got existence. This is how you're going to analyze in your mind. So since cash is not a person and it's a thing, so it's obviously a real account. The second aspect, that's the owner's name. We term it as a capital. Now, capital is a terminology used in place of the owner's name. So it is very evident that it is a personal account. Or we could put it in this way, that if a owner's name is being mentioned in the transaction, we would be giving that person's name followed by the word capital. So if it's Mr. X has invested rupees 10,000 cash into the business, it would have gone like this as cash account and X capital account. Over here, because capital is used in place of the word Mr. X or Y or whoever is the owner, it is the term personal account. Now let's see whether these accounts would be debited or would it be credited. One obviously has to be debited and the other has to be credited. And how do you decide what is debited and what's credited? Which account would be written on the left and which account would be written on the right? Here is the place where you use your golden rules. So according to the golden rules of real account, debit what comes in, credit what goes out. So according to this transaction, is the cash coming in? Yes, the cash is coming in. So since the cash is coming in, it is debited and it would be written on the debit side of a ledger. And if one account gets debited, automatically the other account gets credited. So in case you're not sure about what is going to be credited, but you're sure of whatever is going to be debited, obviously the other account gets credited, because two accounts never in a transaction can get debited. One has to be debited and another has to be credited. Anyway, over here you know that the capital account is a personal account, and the personal account rule says that debit the receiver, credit the giver. And here in the transaction, change all these rules in your mind. You're sure about the fact that cash is the account which is going to be debited and capital is the account which is going to be credited. Once all this is framed in your mind, then you would be doing the journal entry as per the rules which I've already explained to you in the video which we have already uploaded on our channel. So in case you have not gone through the video, see the description given below, click on it so that you get to know how the journal entry is going to be made. The next transaction, advertisement paid rupees 5,000 to Akash. Now, over here, you need to first analyze correctly what are the two aspects involved, or what are the aspects, effects of this particular transaction. Here, you first have to understand the meaning of the entire transaction. Please don't go by the keywords. Here the keywords could be advertisement, money, that is cash, as well as a person's name. So please do not get confused. Understand the concept, understand the meaning of the transaction. Think from a point of view of a businessman. When do we write a person's name? All these has to go through your mind. And is for advertisement, there is cash which is flowing out. But why is the cash flowing? Is it going to a person? If it's going to a person, why was it going? So here it's going for an advertisement. That means that advertisement is the motto why we are giving Akash the money. It is not because we owe Akash the money or we are liable to pay Akash. He is not a person from whom we have taken any services in the past. So this is purely a cash transaction where we are not going to maintain the account of Akash. On the contrary, we are going to maintain an account of where we have spent the money. The next transaction that we take up is deposited cash into bank 10,000 rupees. Now again, what are the two aspects involved? You could clearly see that the cash is going to the bank. So one effect would be the bank, and the other effect or the other aspect would be the cash. Now these two accounts, that is the bank and the cash, we categorize it according to the type. Bank being a personal account. How is it a personal account? Because it's involving people. It is a group of people coming together and forming an organization. It would come under the category of a person. And bank being a personal account, according to the transaction, is the bank a receiver or a giver? So, since we are depositing money into the bank is the receiver, and hence it would be debited. Debit the receiver, credit the giver is the account that the rule that we apply. And cash, since it's going out, it would be credited. The next example that we take up here is purchase goods from Sunil, rupees 13,000. Now, again, there could be a possibility of confusion because there is goods word involved, there is Sunil which is involved, and there is rupees 13,000 that is involved. Please do not get confused. Understand what is the transaction. Now, there is an unsaid rule that in case a transaction has got a name of a person, it has to be a credit transaction. But if there is a cash transaction, the possibility of the name being given is very rare. And in case the name of a person is being given and cash transaction is being mentioned, confusion, the transaction is very clear. It is purchased goods. So it's goods which are being purchased, and since goods are being purchased, always remember we would not be using the word goods because it's a very common terminology. Goods can either be purchased or it could be sold. The purchased goods could be returned. The sold goods could be got back by us. Now all these are divided into 4 different categories. So the goods are divided as purchases, sales, purchase return, and sales return. So it's not goods which is being used directly when we are recording something into our books of accounts. So goods account would be always termed depending on whether it's being transaction, which is a cash transaction. There's the name of a person being given. The person's account would also be recorded. So it's evident that it's a credit transaction. So the two accounts involved is purchases and Mr. Sunil's account. Now here, purchases is something which is a real account because goods are real, and real accounts, not golden rule says that debit what comes in and credit what goes out. Here, since the goods are coming into the business according to the transaction, so we would be debiting the purchases account, and in return we lose the money in case it's a cash transaction. But here, since there's no cash involved and we are supposed to pay Sunil in future, we would not be writing cash, we would be writing that the Sunil's account would be credited because he is the giver. Now purchases is debited and Sunil is credited, but this 13,000 is the value of the transaction. It is not cash. So do remember this rule when you are reading a transaction. Do not get confused that 13,000 rupees is going away. There's no cash involved here. It's a pure credit transaction. So purchases gets debited because goods are coming in, and goods being a real account, the rule gets applied, and Sunil, because he is a giver, he would be credited. The next transaction that is given here is sold goods for cash, 12,000 rupees. Now even if this transaction could be modified by the examiner by giving you sold goods for cash rupees 12,000 to Mr. X. Now that Mr. X would have no relevance, would have no importance because it's a pure cash transaction. There are goods which is going out and cash which is coming in. So in this particular transaction, you could very clearly make out that both the accounts involved are real accounts. Cash is coming in and goods are going out. Now in place of the word goods, we use sales as the terminology. So the two accounts involved is cash account and sales account. Cash, since it's coming in, and since both of them are real account, cash is coming in and it would be debited. Sales is, that is the goods, they are going out, so it would be credited. Yeah, let's take up the last example of today's video. That's received commission rupees 4,500. Now what are the two accounts involved over here? The two aspects that are in this particular transaction is cash is coming in and commission is being received as an income. So the two accounts that we would be maintaining would be the cash account and the commission account. As by now all of you are very clear that cash is a real account, and since it's coming in, it would be debited. But how is it coming in? Against what is it coming in? It's coming in because of a nominal account, that's a commission. And commission, because it's going to be giving you money, it's your income. And hope by this particular examples, things have become clear to all of you. In the future videos, we would be coming up with many more examples which would make the concept of journalizing things much more clear to all of you. Thank you for watching today's video. See you in the next video soon. Do remember that you need to subscribe and hit the bell icon. In case you have not subscribed, do subscribe and hit the bell icon. We will be coming up soon with many more examples before you actually start journalizing things. Once these concepts are clear to all of you, journals would be very easy because it's only how you put it on paper. The rest is actually supposed to be done in your mind before you put it on paper. So see you soon.